research for KLA, which we see it's more fairly valued or overvalued respectively. So no, we generally like KLA. We think it's a good long-term investment to hold, and we'll see what things shake out after.
All right, what I want to do here, let me mute and mute. What's up, everybody? Hold on 1 second. This. And one more. Sorry for the tardiness. I had to wait on a code to type in. Where's the one thing I wanted to? Oh, here it is. You got a lot of cool stuff here. Hold on. Oh, here it is. Right, a couple things. What up, Tobias Papu? Whole gang, how's everybody doing? Everybody good? Everybody busy counting their money made from the market? Are you guys tired of winning yet? As Trump would say. This is Trump's market now, you know. We had a rotation from the Biden market when we were in correction mode. Now we're in the Trump stock market, according to him, until the next pullback. All right, you got some earnings after bell. A couple interesting. AMAT was one of them, and their numbers were pretty good. Their guidance, supposedly, from what I hear, was wider, and that's kind of the issue here. Some profit taking, but that's good. I mean, we want to see as much weakness in as many things as possible, in my opinion. Because weakness has been tough to come by. Everybody kind of looking for it. And, you know, especially some of these solid names, right, longer term. But, you know, we're at an interesting spot here. We're ready to go. Hold on. Let me make sure everything's muted. All right. I won't keep you guys too long today because, again, this week was a bit of a difficult week for couple reasons, but one, you guys know it's a big monthly OPEX. I think the largest May OPEX ever is the label they put on it. And these OPEX weeks, they get really messy. Not even just price action, whereas you get to the end of the week, you can get a lot of pinning action, just again, slop, right? A lot of sloppiness, chop, dispersion, but the flow becomes a real problem too. And that's not always the case, but because this market, for a decent amount of time, even throughout the past bull trend we were in prior to the correction, a very concentrated market, meaning that it's been a lot of the same names that have seen the bulk of the buying. And when you have that type of environment, when you get into these OPEX weeks, you'll see these large orders in those same names. And what it is, it's actually just position replacement, right? So all that buying in those names that we've been seeing over the months, those positions are expiring this week, and they need to replace, if they're interested in replacing some of that exposure, right? So you see a lot of that. We're seeing NVIDIA, Meta, Tesla, millions and millions of dollars worth of buying. And you have that on top of kind of the chase that we're seeing for exposure. And it's not the type of flow we're looking for, right? So that's common during OPEX weeks. So this, I think, there's not a lot of weight to put on this week, in my opinion, price action wise, flow wise, because of quite a few things that we'll talk about quickly, right? In my opinion, what we've seen to this point, and again, this is pretty common when you get the type of backdrop we've been in, we've seen, I think, more of a tape regarding right tail exposure than funds, institutions, players putting on bullish exposure, if that makes any sense. A better way to even put the language on it. What I mean by that is you see, like, when you get a correction like we got, and a lot of people, you get a lot of funds especially, that puke up their longs into the lows, don't believe in any snapback rally. You eventually get a market that pulls away with all these funds, all this institutional money, systematic money, no exposure for any upside, right? So it's not that they want to necessarily, that they're feeling any different about the macro agenda or equities as a whole. It's more force buying, right? Performance chasing. They need to put on exposure because they have no choice. Okay, so you get a lot of that force buying in the same way that it could kind of cascade to the downside, right? Give you an example, kind of what we just went through. If everybody is extremely long and complacent, and the momentum starts to turn and you start to roll over, okay, what usually happens? You get a rush for puts, right? A rush for that protection, a rush for VIX exposure, right? So they're concerned about protecting that left tail, okay, because they weren't even considering it because they were so complacent, right? So we're seeing kind of the opposite of that, right? Funds, institutions are protecting against a market getting away to the upside, and they're caught empty-handed. Okay, so I think a lot, not obviously every single ticket of this rally, but I think the bulk of this rally, in my opinion, and the only thing I'm basing it on is order flow and price action. Okay, but based off what I'm seeing, in my opinion, I think the majority of what we've seen up to this point is more of that than bullish positioning. Okay, now, again, perma bears hear that, they like to hang their hat on that. It doesn't mean that has to remain the case forever, right? A lot of bottoms, as we've kind of discussed, initially will rally because of that, okay? And then once things settle in for a variety of reasons, right? Doesn't have to always be the same reason, but things can change, okay? And I think that's where we're at this point now. It's not how much more upside or how much more can this market extend. I think if you're a bull at heart, we talked about this numerous times in the past even, you don't want that, right? You don't want this market to get too carried away on the upside, because then ultimately that ruins kind of what the correction has brought on, right? The beauty of what corrections do, okay? And we'll go over a couple things showing that. But I think from this point now, what we're looking towards is when this market faces these tests, okay? Could be smaller tests, a couple days of weakness, a week of weakness would be even better, right? But negative headlines and some selling, what do things look like and how do things look like at that point? Meaning, are we seeing that same similar type buying in certain names that we saw forced on the way up? Are they taking advantage of these dips on the way down? Are they taking advantage of these little pullbacks or not? Right? A lot of times it's not going to be the same exact type of flow we've seen up to this point. You're going to see more of sector and factor focus. They're going to focus on certain aspects of the market, right? Aspects of equity, maybe more AI related if they don't really believe in the macro picture much, the macro backdrop. So that's kind of the information I think we get from this point. Um, it's impossible to kind of forecast what that may look like, and I don't think you even want to try to forecast what that may look like. You kind of want to let the chips fall where they may and react accordingly. Okay, if there's a lack of buying, especially could happen initially because we kind of overshot to the upside, and if we overshoot some more, maybe the market starts to sell for a week and buyers don't really show up aggressively all that quick, right? Because of how far we've come. Okay, that's obviously an indication. Maybe we need a little more digestion or weakness before they do. Okay, but sometimes you'll see them show up even in select areas initially, right? Maybe we start to see a market kind of what we were seeing before the correction, more of that dispersion. We're seeing it the last few days, meaning that you see this rotation, right? Kind of this constant rotation under the hood. Maybe financials are down for a couple of days. We see some buying in financials, right? The following few days or week, next week, you see financials pushing higher and tech kind of coming in and breathing. So there's obviously the point I'm making is there are a variety of ways it can go. And from my experience, I don't see any logic in trying to forecast that. I don't see how you can forecast that. You may have an opinion or a bias, right? But you still want to see kind of the evidence, right? You want to see the fruits of that. You want to see it come to fruition, as opposed to just guess of how it may turn out. At least that's the way I look at it. Okay, so I think that's where we're at. That's a good thing. Again, what bothers me when we get to these points in the rally, and it always does, and I think it's just the market in general these days because of how much information is out there, how many people have access to this type of information that they never did, algos, programs. You're dealing with a whole different animal than in years ago, right? But you get these overshoots, and in my opinion, these overshoots are never good unless you have the Fed involved injecting liquidity in some way fashion, right? Because that kind of is a game changer. It changes everything. But when you get these overshoots without that Fed pivot, you almost always have to pay the piper, whether it's weakness or digestion, on the other side when that momentum kind of runs dry. Okay, but even worse than that, and this is what I wanted to pretty much just talk to you guys about today. What you don't want to do is you don't want to aggressively take away from the disbelief, right? The non-believers out there that the worst is over. Like you had a big portion, a huge portion. We've talked about this a lot in the Steam Room and on these webinars. Some of the sharpest minds in this game, right? Reputable names in this game. They are all, they have been all in the same boat. They're all in the same boat, right? They all are cautious, bearish. Not one that I've heard from is optimistic or bullish. Not one, right? And these are folks who know the game well. More than likely know the game a lot better, more efficient than you and I and everybody here. Okay, but even when those type of players, those type of minds are on the same side, right? Almost always something different pans out, right? The complete opposite pans out. And we saw that into the recent lows. You literally had every quote unquote professional side of positioning as bearish as you could pretty much have it, right? I mean, you had even more than that, but literally every professional, from systematic funds to hedge funds to long only funds, you name it. Okay. We've seen it into the COVID lows, the COVID rally. So you don't want to lose that, because that's the wall of worry that builds for these new bull trends, these new phases. Okay. When you get these aggressive V-shaped rallies and they continue to go, and you convert more bears to bulls, right? So even the people, even the neutral players out there who are on the fence, they flip bullish. Bears now are squeezed out, they flip bullish. You do a lot of damage to the lasting power, that bid in the market, that could be such a luxury as you climb the wall of worry in a bull trend. You kind of want to you always want to see these little tests in the market that reel in bears, right? Or gets people feeling skittish. You always want to see that. There's no better rally than that, okay? Because you got that clear sailing ahead. So let's look at a few things here, right? Again, we've talked about this the last few weeks. The systematic fund crowd has been, yeah, even if it's not them necessarily behind the majority of this push, meaning they're buying, just the information getting out there, right? Like, think about this. We follow this stuff, right, a lot more closely than maybe some of the more casual players out there, okay? Before actually the market even made lows, if you remember, we were discussing this, right? We were saying that eventually the systematic crowd is going to get max short, and that usually sets up a great floor, right? That's kind of the conversation we were talking about. And if the momentum starts to turn to the bullish side, that's a lot of ammo that needs to be fired, right? So we were talking about that, like, let's say even a week or 2 weeks before the market made a low, right? And now, like, you look the last few weeks, you look on social media, everybody's talking about it, right? Everybody's talking about the buying power coming out of these systematic funds over the last week or so, right? So the point I'm getting at is, it's not even necessarily the actual buying that gets the job done. It's the front running of that buying eventually coming in that can get the job done, right? That can cascade things. But they've been huge buyers over the last couple of weeks. This was over the next week, coming into this week, you could say. U.S. markets are highlighted there in yellow from Goldman. So you can see still in every tape, up, flat, down, they still need to do some buying, okay? Again, because they're coming from a max. That's the beauty of this crowd being max short and a bottom being put in. All right, it's a beautiful thing. Here's what they look like, okay? So again, down here's where they were, exposure-wise, short, and you can see they're approaching the flat line. Now, as we get into next week, what you're going to start to see, these flows get trimmed down, right? So not only not the same amount of buying in all sorts of tapes, but eventually you start to see, like in a down tape, they start to do some selling again, right? So you see these flows start to get adjusted as they get more long, okay? So from week to week, these things change, right? You can't just look at it one day and assume it's going to last for the next 2 months. They change, okay? As well as the price action can change them. They got certain levels and thresholds that they adjust to, okay? So as of right now, or let's say coming into this week, the way the market was set up, barring any exogenous event, they still needed to do a lot of buying, okay? This is, and the other side. If you guys remember, Charlie McEllie talks about these guys a lot from Nomura. These are the vol controlled funds, right? So they're solely evolving around VIX in a sense, right? That's justifies whether they're buying or selling, plain and simple, right? Bullish or bearish is justified by VIX, hence vol control funds. They had a huge amount of buying over the last couple of weeks that they needed to do, right? So on top of that, with the VIX rolling over as it has from extremely high level that we've seen recently, again, that's just another big crowd, momentum crowd that needed to scramble to put on exposure. Right? And as the VIX sells, obviously, you see VIX making a new low. You see these algos and programs start to heat up, right? So here they are now. As of I think a day or two ago, they were all the way down here, exposure wise. That's pretty crazy. All right, that's pretty crazy. These are the Ridex funds that I've showed you guys, right? So basically, in simple terms, if you want to look at them as institutional money, where they kind of rotate from bullish to, let's say, risk on, risk off, bullish, bearish, right? So when they're feeling a little more confident about the bullish side, they rotate more levered money into more risk on type bullish funds. When they're concerned or they're looking for downside, they do the opposite. Okay. What this is showing, and we've looked at it the last few weeks, you see this big rush into those bearish funds. Okay. Now, again, they're kind of trend followers in the sense as well, kind of like the CTAs. And every time they get aggressive to an extreme, okay, usually you're putting in some sort of low, and they need to unwind that, right? So that's what this chart is showing here, and you can see this is a regular thing. So this is not an uncommon thing. It's just when you get these kind of downdrafts and corrections with some news, especially from a guy like Trump, you have headlines city all over the place. You can get even a more over exaggeration, right? So this has unwind. They've unwind those bearish positions. And what this is showing now is a rotation into those bullish funds. Right? So you can see how low they were exposure-wise into the lows of the correction, and now where they are now off this V-shaped rally. Okay? So the bad part, I think, of, again, this market being more V-shaped, then kind of, here's the ideal, right? And this is a preference, but the market doesn't care what we want, right? But ideally for me, if I had to draw it up, and we talked about this, what you would want, okay, is a 2022 type setup. Okay? All kidding aside, and even though I botched pretty good, I'm not going to lie to you, okay? But that's the ideal setup you want off a backdrop like this. Because what that allows is it allows you time to find names, build positions, find alpha in individual names, even though the markets aren't really going anywhere. Okay? So at the same time, while you could feel pretty confident that because of all that bearish positioning and sentiment, okay, that allows you to be more aggressive into weakness and days of selling, right? And at the same time, you could still look for alpha in individual names and sectors and subsectors while the market may chop around, okay? But the beauty of that is it allows you to build positions in names you like. Okay, when you get a V-shaped rally, it's almost like you get your hands on a few names over a course of a couple of days, and then everything you're seeing is gone, right? And now you're chasing like everybody else. So obviously, when you feel confident that a floor may be put in, those V-shaped overshoots, they're not ideal. Okay, the only time, again, when not necessarily that you get away with it, but the buying a lot of times is so broad based is when the Fed pivots and capitulates. Okay, because what happens is they're buying everything. They're buying everything aggressively. You start to see new names. You see everything, right? Because the Fed is juicing, rigging the game. Okay, but when the Fed is not doing that, you get kind of a group of hot names, usually the familiar names you see in rallies. They explode, and then you kind of, sitting there scratching your head wondering, okay, what do I do now? Right? Because all the names that kind of were seeing the hot momentum are overextended. So there's nothing better, in my opinion, than with that kind of digestion chop after an initial rally off a floor. Okay, I think we still have a shot for that. Okay, even again, this is quite the move, but I think because of how bearish people were positioned into those lows and still, I don't think we've ruined it per se. I think if we extend from here, we can ruin it rather quickly. All right. So that's the way I look at things here, and why I kind of would like. No, I don't like the V-shaped rallies. I should say is the better way to put it. All right. So that's some of the stuff we lost. Here is some of the stuff, the good things out there that are still, still bullish in a sense. The credit market signals, if you remember, as we were I would say the second half of the correction, there was some concern, right, out of those credit market signals, whether they were starting to price in a recession or something snapping and breaking because of tariffs or the bond market, whatever it was. There was a little bit of concern being surfacing in the credit markets, right? That has subsided completely for weeks now, right? And you can see credit default swaps have completely rolled over. All right. So that's a good sign. Right. And then, again, especially if the market kind of digests here. Right. If the market does, face a little test of selling for a week or two, whatever it may be, even preferably on negative headlines out of China or Trump, okay, that would be ideal, because if these credit market signals are still intact, that's even more indication that we should be looking for opportunity on the long side into those pullbacks. These are Sharpies, right? That's another big picture thing we were looking at. It's going to be interesting to see tomorrow if they make any larger move than they've made over the last couple weeks. Okay, again, just to catch everybody up, they were fairly aggressively short. You got a market pullback, right? They ended up taking those hedges off. Here's the zero line, okay? And now we're kind of in wait and see mode here. All right. The ideal bull signal out of this, you get a little digestion, a little breather. All right. So if you do get a little round of weakness and people get excited, especially bears, for a potential retest of the lows that you're already hearing, right? They take the other side of that and get aggressively long, kind of what they did in 2022. Right? So that's kind of the next signal from here. And that would be a big one. Okay. Last thing we want to see is the rally kind of grinds higher and then Sharpie starts slapping on hedges aggressively again. Right? Because then that's just going to add even more confusion to the mix. You certainly can't feel good about that. And, that would be totally normal for Sharpies to do with a market that overextends and more bears converting into bulls. All right, so let's see what this looks like tomorrow. And lastly, every month, and this again goes into the constructive category as well. Every month, BOVA has this global fund manager survey. Okay, in April, literally was apocalyptic. Okay, as global markets were correcting, fund managers were as bearish as you could see. And you can see it on these charts, right? Really bad up. Okay. Now we got the month of May. This is kind of an update off of what I would consider contrarian buy signals. And you don't really have much change. Okay. So even with kind of tariffs, the tariff issue going away, even kind of with the recession fears kind of being pushed aside, fund managers really it didn't really change their minds about things all that much. Okay, again, that to me that's a good thing, right? As a contrarian at heart, that's a good thing. When they're all agreeing on the same thing, and they all agree that things look pretty bleak out there, okay, that means they're already positioned for that, okay? And if things aren't as bleak as they expect, or God forbid you get, you know, things are a lot better than they were expect, that's a lot of ammo on the sidelines that needs to put on exposure, okay? So this here showing you investor sentiment improved slightly in May from bearish April, and this is really interesting too. This is U.S. equity allocation, the lowest since 2023 in May. That was the first correction from the bear market lows, right? So you had the bear market lows in fall of 2022. As things started to heat up into 2023, kind of the real rally, that was the first correction in May 2023. And think about again that entry, right? Like to me, like that entry for what I look at in individual names and stuff like that, I didn't really even participate much in any of that fall 2022 low into early 2023. Because it was all mega caps, it was all Mag 7, if you remember. That was where all the money was kind of crowding into. It was almost like a defensive rally, right? And then in the spring of 23, if I remember correctly, that's when kind of the AI theme started to heat up and you had some more growth name, underbelly names get involved. All right, so that's, I think that's it there, right? All right, so I showed you kind of the good and the bad. And again, we're at, I think, a neutral spot here that if we can kind of rein it in, okay, I think it's still going to be difficult to get weakness because so many people are looking for it. You know, so many people are looking to either catch a short or thinking we're overextended. You know, when you have that type of climate, it's really, really difficult. It's almost like they got to sneak in weakness somehow. But at the same time, we want things to temper down here. We want things to calm down. We don't want to convert any more bulls to bears to bulls here, right? To allow us to give us some time and get other things involved, right? Like, can you imagine, like, you get like you're going to get a Fed pivot out of this after a market extends from here? Like, in all likelihood, there's probably going to be some pain, even if it's for a short period of time. There'll likely be some pain in equities before you would get some sort of Fed pivot. All right. So it just, you have a lot more room for short-term damage. I guess that's what I'm getting at. But that's it. That's it. Name-wise, if you remember, again, you had earnings season, now you had OPEX week, so kind of messy for individual names and new flow. But if you missed the last couple of weeks of the webinar, that's what you would think, right? The names that usually when the market is bullish and the market's rallying, the names that you think would catch and see the most aggressive buying have, right? Because again, players, funds, they're looking for exposure, they're looking for beta, right? They're trying to get their biggest bang for their buck here, right? How do you do that? You look, right? Tesla calls, Meta calls, right? You go to the big guys. Then what you start to see is those heavily shorted, high super growth names, right? The APPs, the HIMs, the Carvanas, right? That sort of thing, right? And I think now we're at the stage where even some of the smaller, more speculative, heavily shorted names, they're starting to see some interest, right? Short hedging and that sort of thing. So it's the usuals, okay? Hood has seen a ton of action. I mean, Hood has seen a ton of action for the past year and a half now. Uber, early in the week, they bombarded. This name has seen a lot of action recently, right? So in my opinion, I think if you like these names, and there's a lot to like about them, obviously, especially recently, these are the names you want to look for, to look entries or off any weakness, especially if flow continues to be here. Right? if you're more on my page and you're looking for kind of newer names, newer setups, we obviously have to wait for that. We haven't seen a whole lot of that. Okay, but some of these older names, they've been lit up. Hood's been crazy. What else? Oh, this name, like this Rocket Labs, they unleash the fury in this thing when they want to buy it. Yeah. Rocket Labs, and I think GJT and the Steam Room mentioned they have some sort of launch this weekend or whatever. But they've been buying these names, Rocket Labs, they've been buying, all kidding aside, even in the market pullback, you see Rocket Lab flow. They love this thing. I saw names like Archer had good news. Names like this have been seeing action of recent. Look at this. This thing had news, though. I think you're going to see their flying taxis at the Olympics, they were saying. So these are the names that have been getting all the attention, and they have been for a while. So I just think you want to see a pullback in these things right now, right? Here's the issue. Here's the issue with these things, and again, this thing may be more of a preference thing than how you guys look at it, but like when there's buying all over the place in these things, right? They're buying when the stock's up, they're buying when the stock's flat, they're buying when the stock's down. There's not going to be any indication of when the momentum is going to run out in this thing. Does that make any sense? You understand what I'm saying? Like the Rocket Labs, okay? You got, like, here's where they started buying this thing, right? You guys remember, quite a few of us owned it and sold it rather quickly, okay? Now, literally the buying in this stock, and when I'm talking about buying, I'm talking about the sweeper call buying, right? Aggressive buying, hasn't stopped since then. Now, sometimes there's a couple days of weakness. You see some put action surface, but then their call buyers come right back, right? And then they're rolling because all that call buying that they made a ton of money on, they continue to roll. So there's no signal here that's going to tell you that, all right, the buying is going to dry up or the momentum is going to dry up and this stock is going to retrace from here. You understand? There's nothing like that going to show up off the repeat buying. So that's kind of the issue for me, especially if after they run, is like, every day it's Groundhog Day. Every day looks like the same thing. Right? Oh, Rocket Labs is catching more flow again today. Oh, Rocket Labs is catching, right? There's no real edge off that information. This is what I'm getting at. Okay? So that's the trouble I have with these names after they move. Again, if I like to focus on new names, but we've talked about this in the past. You like a name like Rocket Labs, right? And you sold it probably early in the last run-up, and now you get this correction and you got this consolidation, okay? If you see a round of aggressive buying that piques your interest and you've been eyeing the name, that's the time to fire, in my opinion, right? That's the time to fire, okay? You don't want, and again, strictly opinion, you don't want to do it when the stock already has done this. Huh? So I still think there's edge in buying out of the consolidation, but it's, again, in my eyes, it's nowhere near the same edge as that initial buying, right? Where sweepers just started to show up. So that's why you hear me talk about new names as often as I do, or complain about it, I should say. Some of the newer names you guys know, again, they're not new anymore, right? TEMs of the world, okay, which look good. Like, I don't, here's a perfect example of a TEM, right? Down here, you see some flow that looks interesting to you and you've been eyeing the name, right? Got quiet. You're looking, you're playing off that decent entry. But now here, it's like, you know, you can see TEM flow. We probably won't know if it's clean unless it's really aggressive, right? And I still got to look towards open interest and see if it rolls and blah blah blah. But it's just not going to have the same impact. It's not going to have the same impact, right? Or this guy here. You guys know I like this name a lot. Like I'm almost tempted. This is a tuck away name for me. I'm almost tempted to kind of sell it here because of how overextended it is, right? So again, it goes to show you how I can't buy it here now. But here, if you were interested or some consolidation, who am I to tell you that the stock can't make another run? A lot of these things run for years, right? They run for years. So that's what we're kind of waiting on now, right? RBRKs, the Rocket Labs, all these names, they've started to see action again. Their stocks have heated up, right? They've rallied a bit with everything else, and now we're kind of at a point. All right, where's the new action going to come from? Maybe there's not any new action. It's just a continuation of what we've been seeing, and that means we're going to overshoot, right? That means things are going to get even more extended, and that can be a problem, in my opinion. So I think we're at a very interesting spot here. There's so many different ways things can go, right? So many ways. Let me see. Any names? Nah, it's the same names, guys. A couple nat gas names I told you that continue to see flow. I like EQT is the one I own. This one I do not own, but they've been buying this AR. You know, again, these are just repeat names. I'm trying to think. Diamond Hands, baby. Are you Struck? Are you in that? Oh, I think you sold it, right? PCT. I saw that had a nice move. I think you just sold it too, though. So you caught the nice piece of that move. What else? Anybody see anything that maybe I didn't pay as much attention to because of OPEX week? Any names that even you guys have on your list of some flow in action? Again, to put it into simple terms, Andrew, you're talking about what? The market, or you're talking about setup wise? Ideal scenario. Are you talking about setup in general, or you're talking about the market right now? Oh, you still got it. Very nice, Chuck. Very nice. Is it on Druckenmiller's list? Because I posted Druckenmiller on Twitter. Hold on. I didn't even get a chance to look at it. Druckenmiller, new positions. CCCS, CZR, Doku. EQT, look at that. NAR, you rat bastard. Two nat gas names he had. BBIO, I know that name. Twilio, Capital One. Got some interesting. Look, Struck. All right, that's it. Isn't that it? PCT. Wow. How funny is that? You know, and what's interesting is you see, again, these names we've been seeing flow, but you see flow in these names, and yeah, you wonder who that is buying it sometimes. It just, makes you think. Like EQT, I mean, we've seen a lot of buying in that EQT. A lot of buying. Interesting. So Andrew, okay, twofold. One, the market, because I don't like chasing overextended markets. I mean, who does? But some are better at it than I am. I really don't feel comfortable. Okay. For the market in general right now, I think the best case scenario would be some sort of digestion, whatever form that may be. Okay. For it to be like weakness from, I think it's going to need help. It's going to need some sort of headline, right? Trade deal goes sour. it's going to need help because flows are still pretty bullish. For it to turn on just momentum and flows, you're just not there yet. So I think you can get more of that kind of dispersion, choppy tape than selling without a legitimate catalyst. But you never know, right? But regardless of what form it comes in, okay, regardless, I think you want to see the market settle in a little bit. Just settle in, okay? And while it settles in, that's where I think there's going to be a ton of evidence and information, the price action, the flow in individual names, right? So I don't even care what the market may be if we're digesting. I'm more concerned with what are the individual names, sectors, subsectors, what are they doing? Because they could be singing a completely different tune. You understand? But so that is what I was referring to as the ideal. I think if you're a bull at heart, that's the ideal scenario. For me, what the last thing I would want to see is you kind of get this chase and overshoot through some of this exhaustion signals we're seeing here. Because, again, it can happen, but almost always you got to pay the piper on the other end when that momentum runs out. So it can get pretty vicious. It can ruin a lot of the good that was here, right? All the good that went into this, okay, a lot of the good is still there, even with the type of the violent rally we've had. I just showed you guys. A lot of it's still there, but this can ruin it quickly if you overshoot. Okay, so that's what I meant by ideal scenario in the markets. For individual names, my ideal scenario, if I could draw it up the way I would like it, is simple, very simple. I like dead heartbeat. Now again, and never, almost rarely sets up like that, okay? But I'm just giving you the example so you understand. What I like is a dead heartbeat, okay? A name that's, active, but no interest, seeing no interest. Nobody has an interest in it. The flow is kind of been a nothing burger for quite a while, okay? No eyeballs on it. And then that first round of aggressive sweeper activity shows up in that name. That's my ideal setup. Nothing gets me more excited than that. And, if it's the first round of buying, it doesn't even need to be this crazy amount of buying to get my attention. All right? Like a lot of times, even signs of nibbling in a name that sets up like that gets my attention. Right? Especially like kind of these post-IPO names and stuff like that nobody's talking about. Because that action's coming from institutions, right? And if I'm looking at a name that's dead and seeing no interest from anywhere, and now there are signs of institutions starting to take notice and build a position in it, that's a real nice tailwind to have, right? Especially some of these lesser known growth names, because, institutions come in and they build a position in NVIDIA. It takes a lot of buying in NVIDIA to move in NVIDIA. If institutions start to dabble in a name like RBRK, you get this, That's kind of this is kind of my ideal type name, and the setup I just explained to you, right? So this is not no $2 zero revenue, losing all sorts of money type name, right? This is a legit growth name, came public in a time that not a lot of names were coming public, right? And just kind of was unnoticed, right? In cybersecurity, hot group. Right? So nobody's really aware of it, okay? Then all of a sudden you start to see some sweeper interest in the name, right? That's what gets my attention on the name. And you start to look at this, looks interesting, blah, blah, blah. And That's a sweet spot entry. Okay. Uh, I think some of the biggest winners too. Like, don't get me wrong, I love buying. There's I love buying a wolf at $1.90, right? When they're buying the living piss out of it. Don't get me wrong, I love it. Okay, but if I was to be honest, the biggest winners that I've seen off kind of that setup and aggressive sweeper activity is usually in the names that are up in the range of, I would say, 30 to $100 that nobody's talking about, and sweepers starting to pick at. This right here's another one. Oh, what happened? All right, like these type of things. All right, $90 stock. You don't hear anybody talking about it. Those are usually end up being the biggest percentage winners from sweeper activity and that type of setup. Because they're more of quality, they have fundamentals, they have growth, and when they get that institutional sponsorship, because there's not that much stock out there, kind of like these mega caps, it doesn't take a whole lot of buying to get these things moving. Like, let's see, what did look at the names Druckenmiller bought, all right? So you see these names on some sharp guys here, right? A lot of times. How about this? And I think you remember, you probably, if you were around, Andrew, Wolf, when we were buying WULF at $1.90, we found out, months later, because these are reported, late, after the fact, Druckenmiller was buying Wolf, right? So more than likely, the flow, the aggressive accumulation we were picking up on was stemming from them, whether it's them or somebody who knew they were buying, or right. So a lot of times when you see that type of setup and you see that accumulation, it's these guys buying. And not to say they can't be wrong. We've seen them; they can be wrong, but I have no problem putting my money next to their money at the right spots, right? I don't want to buy a stock they've accumulated. I don't want to start buying it after it doubles, right? But as they're buying it, I have no problem. So that's kind of right. That's the sexiness of kind of the strategy. You're picking up on institutional buying as it's happening, as opposed to after the fact. Oh, hey, look, he actually closed some wolf. Speaking of the devil, right? He closed some wolf. Interesting. So what else you guys got here before I let you guys go? SITM. Didn't you mention this to me? Somebody mentioned this to me. Who mentioned this to me? SITM. Yeah, this looks decent. I think you mentioned this to me, no? Let me see. Yeah, I remember looking at this. Somebody mentioned it to me. Semiconductor. Looks interesting. Yeah. Does it trade options? Papu? Does it trade options? I don't think I've ever seen flow in this thing. They produce semis. Yeah, I see that. This this is kind of what I'm talking about, Papu, right? So this is a $200 stock. Now maybe it's just me that I'm not too familiar with them, but a $200 stock that not many people are probably aware of, that are profitable. They, it looks like they're profitable to me, just taking a glance at it here. So I like these type of names. It's GG meter not worrying you, Jay. Who's GG? GGT? Wait, GG? Who's GG? The meter? Yeah, the meter. Here's the thing, okay? And that's probably why you're asking, because usually that's the first thing to come out of my mouth. So what GG's referring to is the heat we're seeing on a shorter term basis. Okay, so this type of stuff. Hold on. GJT. All right, there you go. I mean, that's where you're gonna put it in caps. GJT. What are you trying to keep it? You trying to be quiet there on the low? You little rat bastard. You. Yeah. Oh, I think this might be my daughter's account or some stranger's account. I don't know whose YouTube account I'm using, but this is not mine. That's for sure. Anyway, so GJT is talking about this stuff, and this is exactly GJT why I make the comment I was explaining to Andrew that if you're a true bull at heart, you want to see right. You don't want to see this market push through this and overextend and convert more bears into bulls. Because what could happen, and it's happened before. It's happened. I remember in 2022, the bear market. It might have been the summer rally that we kind of were using as an example. Maybe not, but there have been periods where you get a market to rally, and everyone is like, "No, this is a bear market rally. It's not sustainable. No, it's a bear market rally, not sustainable." And it keeps going and going and going until people stop saying that. And they think more people now feel that it can't be a bear market rally because of how far it's come and how strong it's been. And they capitulate. And then that's when the market eventually rolls over, right? So that's the last thing we want to see happen here. The last thing, okay? That would ruin so much good out of what this correction brought, right? Any form of digestion off, and what GJT is referring to, this short-term heat to kind of bring these things back in, right, would be ideal. Would be ideal. So, to your question, GJT, no doubt that some of this heat makes me cautious here, and that's why, for shit sure, I wouldn't chase the market up here, the indexes, and on an individual name basis, I don't want to play anything that really has participated in this run up and is exaggerated. Like the only things I'm looking at have been laggards for kind of like trades right now. I want to see that digestion start to materialize, and even if it's just chop, and then I want to see how they react to different names in different sectors. I think there's a good shot without the Fed involved here, okay, that we start to get some more kind of that dispersion type tape that can annoy the shit out of us. Again, example, look at today. That type of tape. So where you get, the Dow is up, but the NASDAQ's down. The Russell's up today. Tomorrow, the Russell's down. You understand? So I feel like at the least, once kind of this systematic flows calms down a bit, you start to get that. Because you can't treat everything equally here. Right? If the Fed pivoted, then you could say, okay, you can treat everything equally here. Right? You're looking past any bad because the Fed is getting you to look past any negative. And you're looking for that growth on the other side, right? Without the Fed, okay, you can't look at the macro picture like that. You can't. Right? Everything can't be treated the same. And I think up to this point, right, you get that high correlation where there's a relief rally in everything because everything was pricing in a recession. And now those recession fears go away. So that gets unwound. But then you reach a point, then once it's unwound, now what? Okay? Where's the growth? Right? And that's kind of the question. Like a lot of people say it's AI for good reason. Right? These AI names, a lot of them, semiconductors, they've been correcting for a while, right? You finally got a decent correction in a lot of these AI leaders and stuff like that. Okay? So very possible, but what you're going to start to see is the rest of the market at the least chop around while they outperform, right? You're not going to see cyclicals be treated the same way as these AI names unless, again, something changes macro wise or the Fed. You know, like even small caps, right? You probably need the Fed pivot. Like I was looking at something from who was it? Paulson out of he's retired now, but he posted some charts showing kind of the Fed has a big impact on small caps, right? Interest rates have a big impact on small caps. Like you're likely not going to see small caps go anywhere too far unless you get the Fed back in your corner. So these are things we don't necessarily want to work out in our heads. I agree with you. The macro stuff and all, you certainly don't. You want to let the way I look at it, you want to let the price action and the flow work that out for us. And that's what I think we start to see different now. We saw that initial relief, right? Where kind of they're looking for any big moves and squeeze names to put on exposure. Now you're going to start to see positioning for upside, if there is any. Maybe we don't even see that, GJT, you know? I think that's what we need to look for. That's what we need to look for. Well, maybe ideally for a lot of us like you and I, GJT, who like to play the underbelly, maybe they, for whatever reason, they start to go after these names, kind of like they've done with the Archer here recently. You know, some of these speculative names instead. Who knows? We don't, and you know this, GJT. We've talked about it. So we don't want to. You don't want to try to predict that. Again, you can have an expectation. You should have an expectation, but you know, if you're seeing something different, you want to be able to react to something different, right? You don't want to be stubborn and just get stuck on whatever bias you may have, because one, you could be wrong and it cost you money, and at the same time you miss on something that you could have taken advantage of. Yeah, crazy. I actually saw today they were showing them they're going to fly people around in the Olympics, right? Those little flying taxis. I can't believe it. Look at this thing. Been impressive. You know, there's a bit in it that has remained in it. I don't. I even like a little piker. I sold even my runner in this. I had a nice runner that I was going to hang on to, but then when the market was getting a little frothy, I got rid of it. What are they talking about? Tepper. Tepper is buying tech, and Michael Berry is buying Nvidia puts. um. So just to wrap it up, catch of even steamer people. Again, I've been pretty nimble. I played a few things. I played this week, earlier in the week, I played BBAI. I traded Uber. I bought this name. I'm holding half. I sold half. Well, I only got out of half, and then I held the other half. SERV, robotics name that there was some buying in. So I've been playing around with some of these things, but not really getting, too crazy until we get some digestion. You buy anything new, GGT? Tell you all the names, and maybe because I own them, but the names I liked or I liked early on in this rally are names I already am in. That was kind of the problem. But this one too, I traded it, but Uber looks pretty good out of like the more common names that you guys know about. All right, so I would definitely watch this name on pullbacks. Uber, they lit it up. Oh, you were out for a few days. Yeah, again, for what kind of like for what we look at and look for GJT, a lot of the same names that you already know about, you probably own. You know, you know the flying taxis. This one you told me, right? They got a launch this weekend, but they bought the living daylights out of this thing. Rocket Labs. I mean, they bought the living daylights out of it. You want to see? Look here. You know, if they buy the living daylights out of something, whether I like it or not is irrelevant. You know, I have to tell you guys they bought the living daylights out of it. So this was changes off yesterday's buying. All right, 10,000 June 25s, 9,000 July 31 calls, May 30s another 7,100, May 30th 35s, May 23rd 23 and a halves, 2,500 October 38. Look at this line. Now, there was a launch. Yeah, you mentioned that to me. Now, there is some May exposure in the name, right? So, kind of what we were talking about initially during OPEX week, you got May positions expiring, they replace it, but nothing like this. You know, nothing like the amount of buying we saw this week. Like it was nonstop buying. You know, nonstop. This was where's today's action? Is this today's action? Yeah, this is today's. Yeah, this is today's when it was down $1. Look what they did to this thing. This thing was down $1. They inhaled it, GJT. Look at it. You know? So, yeah, again, GJT knows more about these names than I do. You know, there's fundamentally, like what you're seeing now, these things are speculative. You know what I mean? Like, I'm sure that there's a great story behind it, but, they're not profitable yet. I don't know. I haven't seen any guidance of profitability. I don't know how far away they are. But more so than that, guys, again, if this thing is down here, like it was, $4 or $5, and you're seeing buying you're interested in, that's different, right? Maybe if it's at 6, maybe if it's at 7, maybe if it's at 10, the stock, is up at $30 now or 25, wherever it is. So outside of a trade, it's hard for me to get bullish. Something I've been watching catch a lot of flow from $4. I mean, I bought and sold for $1. You understand? It's just difficult to get as excited about it. They're more, from my experience, they're more prone to failure when after they quadruple and looking to break out of flow again. They're more prone to failure. They certainly don't have to fail, but they're more prone to failure. All right. When a name is catching action at $4 and it's aggressive, you got a pretty high win rate. Or even more so, your downside is pretty limited. It's the better way to put it. But if you're wrong at 25, right? Depending how you're playing it, maybe put a stop loss. I don't know. If a rocket blows up, what's this thing look like? What happens if a rocket blows up, GJT, off a launch? Does this thing shed $10? I really don't know. So that's kind of, that's why you don't hear the excitement as much after these names hatch, like we say. But there's still a lot of buying in these things. A lot of buying. By the way, and GJT, you remember the amount of buying that came in Archer over here, okay, in this initial run-up was jaw-dropping. All right? GJT will tell you, he was in all of them, even before the flow came in. Okay? But we, the whole steam room, we bought this one, we bought Joby, right? This one, Joby, they're the other one. Okay? Like the amount of buying that came into them at that time was ridiculous. Now, I'm talking about. Here's a name that has done nothing for a year and a half, right? You know it's not overcrowded, overowned. Nobody's looking for an entry in this name. And then all of a sudden, sweepers come in bombs away. Like, that's a pretty good setup. That's a pretty good setup. Max, I do sector sentiment right now. Well, I think you're talking. Are you talking about positioning or sentiment? Those are two different things. Those are two different things. But I didn't touch on it yet. But go ahead, ask me. Ask me what are you curious about, sector wise. Ah, I was looking for flow today, because you had a decent reversal in this today. But this, you know, here what's crazy, Max, is this. Watch, I'll show you. Hold on. Do I have it here somewhere? Let me see. Where'd it go? Oh. Yeah, here. Look. So where is it on here? Let me see. And what's interesting, hedge fund wise, this was one of the sectors they were buying before all this shit hit the fan, because they were kind of defensive, and now they got smoked out. So you got a nice setup there, longer term of positioning. You probably would want to see flow unless you really don't care about the short to intermediate term and you're looking longer term. Because what can happen is it can linger for longer than you would like. Kind of like materials, right? Even if they bottom, you may get, you could get, the action just is annoying. You don't really get much of a rally. But this XLV does look interesting off the action today. Let me ask you, Max, are you talking the trade or are you talking longer term? Because this was the big drag, obviously. Like, look at this thing. What a debacle. But yeah, I would look for flow in some of the good names. I would definitely look for flow. Like this one, they love to buy pullbacks and ABBV sweepers. They love it. And this has been one of the best names. Every ABBV, I probably jinxing it right now, but every ABBV pullback that I seen a nice looking sweep into has been money. They usually with a little time, but it's been money. This is a stud. This is a stud. Yeah, exactly. That's kind of, I think people, not you, but I'm saying in general, even myself, we don't prepare ourselves for that, right? You see something that really has got his rear end kicked and positioning is washed out really nicely, and you're kind of eager to get in, but at the same time, the worst of the selling may be over, but the upside may not be there for a while. And I don't know, kind of the catalyst behind the whole, because I don't follow it closely. What Kennedy is doing, is that creating problems? You might have some big changes there that are playing a major part. So, DGX, I know that name. Yeah, DGX. Oh yeah, this is this is like what healthcare correction are you talking about? But this isn't this medical. I think this is medical equipment, isn't it? Let me see. Yeah, I don't. Is it in the healthcare group? Maybe it is. It's kind of more of these type names, right? That are taking it on the chin. Here, look at Merck. Here, this. Now, if you're not bullish, right, and you're really cautious on the market, these defensive healthcare names may not be the worst idea. Now, again, just to make it clear, I'm not. I'm not bearish. I'm a bull that just wants some digestion here. But if you are bearish, some of these big pharma names that are getting their rear end kicked are probably worth a peek. Yeah, longer term, definitely probably worth looking at instead of the dailies, right? It's nothing out of the ordinary. What's UNH look like? Let's see. Oh my god. Wow. But look at the run of this thing, right? You got some long-term bulls that are crying the blues here. ISRG, that's kind of one of my biggest misses. Was it last year? My biggest miss. Multiple sweeper activity, and I didn't pull the trigger. Look at this. The circle's still there, Max. Look at this. Look at that. As that thing is breaking out, look at it. Oh my God. I'm sick looking at it. Look at this. And then you get not one sweeper accumulation right here. Right? Look at this. Oh my God. Oh man. But yeah, this is a stud. But you see the difference, though, Max? You see, like, where I kind of more inclined to get excited about it than all the way up here now? I get nervous up here now. You know? I get nervous up here. Again, depending on what you're looking for. Because, like, here's what I'm cautious about. Okay? A name could be totally bullish. And you just, after a rally, it's totally normal to go through something like this. Right? So, what pullback? How do you know which pullback is going to be the last of it before it rolls over? I've never been able to come up with some sort of indicator or signal to let me know that. Okay, what I'm telling you about sweeper activity, which is my primary edge in stock picking, the more stock goes up away from that entry where sweepers started buying, the less of an edge you have, no matter what flow you're seeing. I've seen time and time again a name start to catch sweeper interest down here and continue to see sweep rolls, right, all the way up until the last day and the stock rolls over. You got to understand, when those institutions, when those funds are rolling, they're rolling almost probably with the intentions that last batch of rolling is going to lose money. Crazy, right? When you think about it, that's where, like, I can't do that. I can't have that frame of mind to do it. I can't adjust a position knowing that my last adjustment is probably going to cost me money. But that's how they catch these huge trends, right? Because they keep rolling and rolling and rolling and rolling, taking profits, rolling, taking profits, rolling, taking profits. That's how they catch these big trends. But that's why, kind of to the point I was making to Andrew, my ideal spot is here when it first starts to catch action, as opposed to up here, even though it may still be seeing action. No, but again, you see, right? It takes a lot of patience to, especially this market, more so than any market I've been a part of the last couple of years. It takes a lot of patience waiting for those type of setups. It's been a very, at times not as much, but all in all, it's been a very concentrated market the last few years, right? It's the same bucket of stocks, right? When they're buying the financials, they're buying the same financials, right? When they're buying those mega cap names, they're buying the same large cap names. When they're buying the speculative basket, they're buying the same speculative names. All right? Like I could tell you, tomorrow you tell me that the speculative names are going to have the momentum. I can almost tell you exactly which names are going to see sweeper activity. It's not going to be new names. It's that same freaking basket that continues, right? The NBIS. It's the same basket. BBAI. So that's the best of rallies, or the best of markets, not even rallies, are when that first batch of names gets hot, breaks out, sees action, continues to see rolling, but now they're looking for that next batch, right? That next, again, if you think of the COVID bull market, that's what made the bull market ridiculous. All right? It was kind of that stay-at-home trade. First, it was the hot software names, Zoom, those guys, they broke out, right? Then the next batch of stay-at-home plays, Peloton, this, that, right? Then the next batch, then SPACs, then, right? Meme. It was like constantly an influx of new names, IPOs. I mean, it was ridiculous. But that's because the Fed threw the kitchen sink in. They threw in the kitchen sink. Yeah, Max, that's probably a good idea. Yeah, that's a good way probably to put a bow on this webinar. Tomorrow you got OPEX. So again, flow wise, not to disappoint you, but I wouldn't expect too much at all. Again, you get these little pockets. The way I look at it, you get these little pockets of kind of where you'll see an uptick in momentum sweepers. They're usually playing weeklies, or tomorrow they play 0 DTE. That's where kind of you'll see some scalping opportunities where the momentum may pick up. It doesn't last that long, but you get enough where you can probably scalp. That's kind of the gist of it. Good news, tomorrow's OPEX and it's gone. And Monday we start a new week. Earnings season, kind of the big boys are behind us now, right? Earnings season, little by little, winding down. And hopefully we get a little break, a little breather now to kind of see if the real buyers, right? And that's my last point I want to leave on. When you got a market like we had here, right, where everybody puked up exposure into the lows, okay, you had people on Twitter calling for a 1987. What'd I do? 1987 style S&P 3,500 targets were being thrown all over, right? That was this. Okay? Then you get the momentum shift, and especially here, right? When it starts to go in the other direction. Okay? And you're covering shorts and all that. The majority of buying you're seeing on those up days, that's forced buying, right? A lot of that buying is not even, players, institutions that want to be long. They have to be long. Right? Whether they're hedging shorts or need exposure on, they're chasing performance. Right? It's not them handicapping a name and seeing an opportunity 6 months out, a year out. Okay? It's forced buying. The beauty of when a market goes into a little bit of consolidation, digestion, or weakness, the buyers that show up into that, those are real buyers. Right? Again, maybe not every single one, but you get the point. If somebody's starting to accumulate a position into digestion or weakness, they're not being forced to do so. Right? They're doing it because they got some conviction on what the future may look like. So that's kind of what we need here now. Okay, we know what this was all about, right? All the flows, systematic flows, shorts, hedging, covering. We know what was behind this rally. Now, what we want to see is if the real buying shows up, and you need a little breather to attract it a lot of times. All right. So again, tomorrow, who the hell knows? But hopefully into next week, we start to get some more information and better evidence of what the future may look like. SPACs are back. I know, crazy. Starting to see more and more of them, GJT. Nuts. Crazy. I thought they were dead for good. They certainly aren't. All right, everybody. Enjoy the rest of your Thursday evening. If you're a non-member, have a good weekend. And the rest of you, I'll see you mañana. Yep. Later, Max, GJT, everybody. Have a great night.